Alrighty, folks. If you watch the daily financial news this morning, I mentioned something that may be perceived as bad news, but is it? And that, of course, is mortgage rates have now hit a 52-week high. Earlier in the year, they peaked out at 7.22. As of yesterday, they were 7.24. And I suspect going higher today. So we're going to talk to the one and only Dion and ask him, what does he think high rates mean? Dion, high rates, man, high rates, high prices. What's going on? What do you think?
No, I think it's a great topic. I did hear it during the daily update this morning, and then I was on doing some other research on, which markets are up and which are down. And there's, we're at record highs in over 60% markets. And so it's good information. If anybody watches the daily update, I would like you to go there to have factual proof that I was first and Dividend Dave wasn't. So for once, I was able to beat him in the comments. It's pretty rare. But what I really like about high rates is how it has to cause a crash. Right. It's unaffordable. It's unsustainable. All of the crash bros are going to have more ammunition. And that every one of their successful videos takes away another couple percentages of our competition. There's a couple things to think about when you're looking at high rates as far as buying. For me, the thing that shifted when we had low rates and a ton of demand was speed. Right? From 2018 to 2022, I wanted an offer in within an hour of the listing hitting the MLS. Right, with literally my agent and my broker knew if I didn't get a response within an hour, I was moving to the next one to get a faster response. And then in the last year, as rates went up, speed's not our friend. We now have the opportunity to identify the motivated seller. As prices don't go up as fast, there are people who will list because it's a high price, and if they get it, that's great. And if they don't, they're never going to sell. So it doesn't matter how long it sits on market or what offer you make. But there are people who have to sell. And now that it sits on the market for a while, we can make ridiculously insulting offers from Patrick Bet David and say, like I did a 20, what was that, 500 to 400. So it's 20% off offer and then stuck there through the whole thing.
Yeah.
We can do that now. So as rates stay high, there might be some people who say, I'm going to get my loan and keep the high interest rate and not buy it down because I plan on refinancing when rates come down. And I can see the logic there, but that's not how I do it. So me personally, I always buy the rate down. I don't want to gamble on if rates come down, then I'll be able to make it work. If rates come down, I would refinance. I did in 2020. About half my portfolio was refinanced in 2020 because rates went down on loans that I had purchased the rate down on. So I would still continue to do that, even if I really think rates are going to come down, because we don't know. They could be 10 in 3 years. You could have now feel extremely lucky that you have a 7. They could be 4 in 3 years. But I would buy it down because my plan with my properties is that they all perform better than my marriages, actually until death do us part. So I'm always planning long-term on those. I buy the rate down every time. Yeah. In this market, if it's sat on the market long enough, one of my negotiating strategies would be to try to get the seller to pay to buy the rate down.
For sure.
I'm looking forward to, again, less transactions, more lenders and agents working harder because there's less work for them to do to make their money, to benefit the investor. And this, so I tried to start with all the puppies and rainbow stuff. I'm gonna it's like a dark evil cloud of Mr. Burns from The Simpsons now, and I'm gonna say, here's how we benefit.
There you go.
It sucks to say. I'm sorry. We're spending hours of our life every week trying to convince people to get on the property ladder. Look how you'll benefit to be on the property ladder. So if it's harder to buy a house and more people need to rent, what happens to rents on the properties that we own? It sucks so much to own real estate that we're now going to have to make more money because it's harder to buy houses with high interest rates. If people have been listening, I don't feel horrible, because if people have been listening you've been doing this for over 5 years, right? Like getting this information out there. We're spending all this time to try to get people into the position where it's like you could have a shirt.
Yeah.
I used inflation to get rich. Ask me how. Right. This is one of those times where that's happening.
Exactly. So yeah, when I look at this from the macro picture, and that's kind of where I start with everything. But when we talk macro housing, I think a lot of people got it wrong. How many times did you hear 3 or 4 years ago that if interest rates go up 1%, prices have to fall 10%? I mean, Kevin was saying this forever, and he wasn't the only one. Well, guess what? Rates are up 500 basis points and prices aren't down 50%. People don't realize that it impacts transactions, hence the crash in transactions of 40%. I went on record August 3rd of this month saying that I think transactions for the month, which will be reported in September, will break below 4 million. So again, higher rates mean less transactions. Now, could higher rates eventually impact price? Absolutely. But what people don't realize is housing is not immediate. It's not a shirt at the store. It's not new shoes or whatever. Right? These are where people live. It's their home. So they hold on, right? So higher rates is going to hit demand. But again, I have this saying that now even Jeb Smith is copying. The Fed broke housing. And what people don't realize is they all talk about affordability and high rates and this, that, the other thing, which is all mathematically true. What they're failing to miss is the supply hit. People, it blows their mind that the Fed taking rates up so fast has hurt supply more than demand, because you can buy the rates down. You can get the seller to buy the rates down. You can get I mean, there's all kinds of things that you can do to get around rates as demand. Supply is broken, man. The move up buyer is broken, where it's just not there. So I think rates now at a 52-week high and going higher will hurt supply just as much, if not more, than demand, and nobody is talking about it. What we will have happen, if I am right, and you'll be able to watch this because the numbers were reported monthly, is we will see days on market double. Inventory, active inventory will go up 3, 4, 5%. Think about that. Two metrics. Days on market doubles, active inventory goes up 3 or 4 or 5%. Most people are like, hey, days on market doubled, inventory has to double. That's not how it works, right? So it's going to break a lot of people's mind. And just like last year, 87% of people think it's a bad time to buy, which is when I go shopping. I did it last year to the tune of a $90,000 profit in 2 deals out of the MLS. So I love it when the media says it's a bad time to buy, because like you and your duplex, which you bought, was listed at 5, got it 4, it's probably worth 8. Sounds like a good deal to me. If not a great deal, is that's what I'm looking for. So the thing I am excited about is a slower market. Slower markets help buyers. It's not great to be a seller in a slower market, let's be clear. But I'm team buyer. I'm team build wealth. I'm team cash flow. And I'm team do the work. So I talked about Ben, I think, for 2 days in a row, because I think Ben's story is like yours, but you're one of my millionaires, so you don't count, right? Because you're special. Ben found I think it was a fourplex for listed at, I don't know, the numbers were close, 250. He wanted it for 200. 60 days on market, the seller went with someone else. They didn't close. This, that, the other. He got it for 200. Follow up, do the work. This is not, I don't promise easy, but I promise possible. And I'm excited for a slower market, because at the end of the day, getting your great deals come from motivated sellers. And sometimes they got to sell, and I want to be there. So that's what I'm thinking about high rates.
So I agree. I think predominantly the people who watch our content are looking to get on the property ladder, grow their portfolio, reach financial freedom, or optimize their financial freedom, right? So that's generally who we're talking to. But sometimes there's a seller. There's somebody watching these videos going, I'm going to sell the property, and could be somebody, I'm going to sell, redeploy the funds. I'm going to grow my portfolio by selling. Mm-hmm. So here's the takeaway in a market like this. If you're going to sell, Ben bought a place for $50,000 off that needed work. I bought a place 20% off because it needed work. In a high interest rate, low transaction market, clean properties fly off the shelf. So this is one of the times it makes sense to do the work to prep the property for the sale, versus 3 years ago, you could have a place with burn damage,
yeah,
and get high offers waiving contingencies, waiving appraisal. So we're not in that market anymore. So 3 years ago, 4 years ago, if you had a dirty looking, ugly property that needed a lot of work, put it on the market, see what you get, and you probably get a good price. In today's market, I think there's a return on the money you spend on the repairs for a sale now, more so than there has been for 5 to 10 years.
Yeah, I agree. Dion, do me a favor, man. Where can people find you?
Right here on YouTube, Dion Talk Financial Freedom, where I do my live streams Tuesday afternoon, 4 p.m. Pacific.
All right, buddy. Thank you very much.